Well, the U.S. economy may get on a solid growth track in the coming months, despite the slowest GDP expansion in nearly 2 years. That's according to economists who say the housing rebound and stronger hiring will boost growth. The Commerce Department says revised GDP figures actually show that the economy expanded in the fourth quarter by 0.1%. The previous figures showed that GDP shrank by the same amount. Now, despite the improvement, others expected a bigger expansion. And joining me now with a closer look at the U.S. economy and how the looming sequester, that's the $85 billion of automatic spending cuts due to take effect tomorrow, can impact growth going forward, is Markus Schomer. He's the chief economist at Pinebridge Investments. Markus, thanks for joining us again.
Michelle.
So, Markus, what does today's GDP report tell us?
Well, I think it was a big misunderstanding. People look at the headline and think the economy is weak, but that's actually not the case. I look at private domestic demand, which is consumption, business investment, and housing, which is what matters in the U.S. economy, which drives long-term economic growth. Those three sectors grew at 3.5% in the fourth quarter of last year. If that had been the headline, GDP 3.5%, we would talk about a very different market reaction right now. What held us back was fiscal austerity, which may not be temporary because we have the sequester coming up, but something that was clearly temporary, and that was an inventory correction.
So things are better than they appear?
Yes.
So what does that mean for growth for the remainder of the year then?
I think growth in the remainder of the year will remain moderate. I think there's very little risk for a significant slowdown towards, let's say, zero or, God forbid, falling back into a recession. The private sector is growing at about 3 to 3.5% right now, and most economists have assumed some sort of fiscal headwind this year, whether it was the fiscal cliff, the taxes, the sequester, you name it, and we shave about 1 to 1.5% off that 3 to 3.5, which gets us to something about 2%, 2.5% growth for the rest of the year. And I think that's a good growth environment for equity markets and also for fixed income markets.
You've mentioned the sequester twice. That's due to take effect tomorrow, $85 billion in spending cuts. The stock markets have largely dismissed it. What do economists have to say?
Well, the reason the stock market has dismissed it, first of all, because the actual number that will hit the economy this year is 40 billion, not 85 billion, which is a lot less. And it will hit the economy over the course of the year, not just everything will hit us tomorrow.
Right.
And we don't know what other deals are in the making during the course of the year to avoid some of these sequester cuts. And in addition to that, the Federal Reserve keeps buying $85 billion of treasuries every month. And that, I think, is the reason why stock market and bond market really don't react to the looming sequester at all.
But worst case scenario, President Obama has been on the road saying, oh, the sequester is going to kill 100,000 jobs at least. What's your take on that? What's the worst that can happen? How will this affect U.S. GDP?
It's hard to say what's the worst that could happen. The more concentrated the cuts, I think that's probably would be the worst case scenario. The more concentrated the cuts, the harder the hit to the economy. The more spread out, the lesser the hit to the economy. Maybe we will lose 80, 90,000 jobs in the government sector, but the private economy, the private sector economy is creating about 250,000 jobs right now per month. So we will see maybe more subdued job growth, but we will still see job growth. That means income growth, and that means consumption growth.
But which industries would be hardest hit? Chances are Congress is going to come back with some watered down version. It'll take a couple of days, a couple of weeks, but something will happen. Which industries will be hit?
Well, obviously the defense industry is number one. It's very hard to avoid significant cuts to private sector firms that deal with the Department of Defense. I think this is the hardest hit sector of the economy. Other sectors I would look at are those who have extensive dealings with the government. Everybody who provides government with all sorts of things that the government purchases, I think, will be affected because the cuts as they come into play affect most departments about equally. So it is not just one or two departments that are hit, but it's all departments in Washington, and they will all slow down spending.
What about the impact that this could have on global markets, some of the U.S. trading partners, for example?
Well, I think the main impact is through confidence. The fact that the Congress once again wasn't able to come up with an agreement, with a solution, I think undermines the confidence that the rest of the world has in our political system here in the U.S. And I think that is the most obvious way to me how this sequester issue is affecting the rest of the economy. It undermines confidence in the bond market, it undermines confidence in U.S. assets and in the U.S. economy in general.
And in U.S. Congress. Okay, thank you so much, Markus Schomer, Chief Economist at Pinebridge Investments.